This is BofC Live, the video and podcast series of Business of Cannabis. Find out all that we do at businessofcannabis.com. Coming up on BofC Live, we connect with Narbé Alexandrian, the president and CEO of RIV Capital, formerly Canopy Rivers. RIV Capital is a cannabis investment and acquisition firm whose mission is to acquire, invest, launch, and or develop U.S. operators and brands across financially and strategically attractive states to create a multi-state platform. I enjoyed this conversation with Narbé Alexandrian. And Narbé, thanks for being here.
Thanks for having me. Really excited.
I'm excited as well. We've talked not on this platform before, but certainly I think it was during COVID, but also through Zoom, just not recorded. Thank you for making time. We're excited to connect. There's so much happening, and we wanted to have you on to sort of talk about some of it and how it impacts you guys and how you guys are leading it. Sound good?
Awesome. I'm super excited to be here. I'm a huge fan of you, huge fan of the work that you've done for the industry over the last few years since I've been in the industry. So just glad to be here talking to you today.
Well, that's nice of you to say. We should just end it there and everything will be fine. I'll just cut that out and we'll just run on to another day. No, I'm just kidding. Talk a little bit about where you guys are right now, and maybe talk before even that, sort of how you got into the industry. Sort of your background.
So I joined the industry in summer of 2018. My background was in technology venture capital. So I worked at OMERS Ventures, the largest VC fund in Canada, worked with largest government incubator in Canada as well. Just been around startups my entire career, and just really looked at the cannabis industry as this revolutionary point in time in the summer of 2018. This is pre-Canadian legalization. The markets were the markets, but just seeing how Canada was legalizing, the US would be next, Europe would be after that, and how much of a growth industry this is and how much of it looks like tech. Because in tech industry, you aren't just really guessing what the future looks like in an educated way. And the same thing in the cannabis industry, you're making guesses on what's going to happen next. And we've seen how this market has evolved. Like pre-legalization was all about supply. After legalization was all about extraction. Now it's all about brands and who has market share, and then push towards the US. The US is going through a similar evolution as well. So I really like that concept of nobody knows how this thing's going to play out. It's not a mature industry. So if you're in here in 2018 and you fast forward to 2038, you've had 20 years of experience in this industry, and people are just starting to come in because now it's a mature industry and the stigma's gone and so forth. So it's a great time to jump into it.
It's really a compelling and an interesting analogy to that. And sometimes tech and cannabis intersect and some of the sort of roles you guys play, but it is interesting because you talked about, like, it was all about cultivation, then it was about processing, manufacturing. Now it's about brand, but also about tech and emerging markets. And as you sort of look ahead, like, you know, the US, it's constantly in the cannabis news for sure, but it's also like fits and starts, which can be frustrating for people following it along. Certainly it can be frustrating for companies that want to do business in all these places. But are there places almost that you guys are investing, or portfolio companies that are not independent of what's happening, but can be successful if it never gets to more states, or whether it fully legalizes next year, but have this sort of strong foundation to actually say, you know what, we are built to withstand whatever the ups and downs may be, whatever legalization looks like, but are in it for the long haul. So in 2038, by your note, like, that they're actually still there in that time horizon.
Yeah, I think that's a great question. A lot of times investors, specifically retail investors, see the cannabis industry as a short-term play. Like, how can I put in $10 and get $14 in 6 months from now and make a 40% return on my investment? And that's not the way to think about it. Like, this is a long game here, right? And we're still very early. Like, we haven't even seen US legalization, let alone interstate commerce, let alone globalization. And even in those stages, you're going to see brands just moving all over the place and becoming mainstay. So it's still extremely early. You can tell from talking to regulators and talking to and seeing in the US, even state by state, they're just very cautious and pessimistic on how to launch a cannabis reform. And that takes time. That might even take decades in order to get to where we have in our heads of, well, that's how beer is and how that's how cigarettes are. So it must be something similar to that. So but when we look at RIV, like, we've always, one of the values that we always look at is, how can we build something long term that outlasts any of us in our careers? Like, we want this thing to be 20, 30, 40 years of existence in some shape or form, whatever it looks like. And how can we make those decisions? And in the past, that didn't used to be like that. Speaking very candidly, myself, as well as many other operators, there were times where we took somewhat of a shorter viewpoint of, hey, like the markets are down like they are in January of 2022. What can we do to like help the create awareness so that we get that there's like a bit more of a bump in liquidity or something like that towards what our stock is. And just being in the industry for long enough, like those things just drown out. I think the number one goal for us is how can we create long-term shareholder value. So to answer your second part of your question, we're looking at the US market. A lot of the same issues we saw in Canada, we're still seeing in Canada, are going to apply to the US. You have some states that are limited license, so it's very hard to get a license in there. But that said, that's a short-term competitive advantage. Over the long term, they're going to get margins going down because wholesale prices are going to drop, because competition is going to increase, and it's going to be who can create the best cannabis, not who can create cannabis.
Right.
And we're seeing that slowly trickle down to the states, and over the long term, that's for sure going to play. This is even before interstate commerce takes place. So when we look at the different markets in the US, we don't not only ask ourselves like, okay, well, we have a limited license in that state potentially. How can we, what's the short-term advantage here we can do for 5 or 6 years to push the brand in front of consumers? We're also thinking of, okay, well, if the doors open up and you get these California and BC bud producers into different parts of the US, how's that going to screw up everything that we've built, right? And is cultivation the answer? No, it's going to be brands. And how can we build brands now that can withstand competition coming through? And how can we create a supply chain that can withstand competition coming through? So, and then we anytime we look at a deck or a deal, we're sensitizing the crap out of the model and saying that, okay, well, we saw what happened to Canada and the prices of cannabis coming down. We've seen what the illicit market could do in Oklahoma and what happened in California. If we apply these shocks to the company, and if we adjust them for standard of living, because cannabis in Michigan is 40% higher than California is from a standard of living perspective, does EBITDA even exist in this industry?
Right.
And in some places, you're like, well, government taxes you way too hard. They don't want you to make money. And other places, you're like, yes, you can actually make a decent amount here.
It's interesting because it is like redoing the conversation over and over again, given these your sort of words shocks, right? Like, how does it withstand? But do you think sort of having a Canadian lens on it, having seen, medical, pre-legalization, legalization with limited access for consumers because of licensing, right? To then like now, certainly in Ontario, which is, you could argue the most mature market and most flooded market with retail in the country, like, are those lessons easily applied, or are some takeaways from that to what's happening in the States? Is it, you mentioned brands, like, is it like, if we knew now what we know about brands and the importance 5 years ago, would the money have gone to different places? Like, how do you sort of anticipate that and role play that over and over and over again?
Yeah, I think it's a great question. And to answer it in a short way, I think most of it can be applied to the US. I think the one piece that can't is marketing. What we found in Canada, and I do agree that the money wouldn't flow as much back in 2018, 2017. How do we know how this plays out? Is that you really can't grab the consumer's attention if you're a brand. Everything looks the same when you go to the store. The tubes are the same. But most companies buy the same packaging from the same suppliers. So there's not much of a difference there. The coloring can't be as vibrant as you want to because there's limitations there. And there's no advertisement that you can do in social or traditional or any of the media, which drives me insane because I see beer commercials all the time on Leafs and Habs games.
It's impossible to miss it. So
it's exactly, and my kids are watching too. So I mean, what's that going to help them as they as they grow and condition themselves? But that's a huge miss on our end, because if you can't provide cues for the consumer to understand what brands are what when they go into the store, they're just going to see this as a homogenous selection of product, and it's going to be all about trial and error. So in the traditional CPG world, where you just pump marketing dollars into making that brand stay in your head as a top 5 brand, so when you go to the store, you're like, I know that brand, I'll buy it and I'll understand that. In the cannabis world, it's just about trial and error. And when there's about like 1,000 new SKUs showing up every 6 months, it's really hard to even remember what you bought, let alone try to add more to that and say, okay, well, I bought Broken Coast a few months ago. What was that like? I don't even remember because I bought 6 other brands after that. So it's going to be incredibly hard to stand out in the market. The ones who have are great, but even you see like the tables of the top 10 companies, and they're switching all the time. And there's a reason for that, is because consumers don't have those cues.
I want to actually ask about that specifically because it does speak to brand and what is popping at certain times on like the top 10 list, right? Like it, it surprises me. So you can either agree or not. Like sometimes teeny tiny companies make huge inroads on some very specific categories. And not that it's a question, like it's based on usually quality. Like someone grew something great and then people find out about it. Is it also something to consider when thinking about US markets that there's like, I heard someone describe it, a Leafly guy that we had an event, like describe it as a hype consumer, where like the brands they buy is actually part of their lifestyle and they are like micro influencers, if you will, because they are like, if 10% of the people are buying 50% of the product, like in store, like it becomes it flips brand very specifically on that type of consumer, which is important to think about as new markets roll out.
Yeah, I wrote a piece recently for Entrepreneur Magazine that was published that talked about kind of the evolution of brands. And to shorten it, initially it's brand as an item, which is just like, think of the deli style offerings in those illicit stores back in the day, where you go in, there's jars and you just smell it and you pick the product. You don't know who made it or anything like that. The second stage was brand as an attribute, and that's when the packaging becomes pretty. You see that in the US with all these really pretty designs and beautiful packaging. And that goes only so far. The next step, which we haven't really seen so many cannabis companies jump through, is brand as a personality, which like it applies to your personality, what you want to do. Like I wear Nike because it makes me feel like an athlete, or I wear Lululemon because it makes me think that I'm giving back to something. And then the last piece is like brand as a social policy. And that's when you actually buy stuff and they take a portion of it and they put it to like the charity of your choice, or charity of their choice that aligns with your values. So instead of putting money into a charity, you buy a product and a piece of that goes to charity. So you feel good buying product and you feel good consuming stuff. We haven't really seen those last two buckets in cannabis yet. We're seeing some fall over, like Cookies does a great job with branding. Jungle Boys does a great job as well in the US. But that's the branding side. And I think when